Members, I welcome you for the today's study circle GST updates. We have with us known speaker CA Hanish S. I request Bangalore Branch Chairman Shavan Gurtur to escort the speaker onto the dais and welcome him with a flower. Coming to the few announcements, we have upcoming program. We have in 2 days seminar on international taxation, and tomorrow and day after tomorrow is scheduled. On 30th, we have scheduled the cricket tournament for the chartered accounts at BEL ground. Already 12 teams have registered. You can come and visit the as audience also. You can have the matches between the members. On 1st July, we have scheduled the CA Day celebrations. The past president of ICI, CA K. Raghu, will be in the flag hosting, and we have special programs arranged as blood donation, Swachh Bharat campaign. I request all the members to participate in the special 70th year CA Day celebrations. And as per the head office instructions, this will be the last CP without charging. Next week onwards, we have to compulsorily, in all over India, Bangalore branch is the only branch doing the free programs. But as HO is instructing strictly, we have to follow the rules by the head office, and henceforth the nominal amount, still amount is not decided. We are going to have a nominal amount for the study circles. Already we are charging for the breakfast meeting. Members, coming to the today's session, GST updates, CA Hanish. CA Hanish has completed his chartered accountancy course in 2008 and has also completed company secretary and also a law graduate and BCom graduate. He is practicing as a chartered accountant from last 7 years and specialized in indirect taxes. He is a regular speaker at various forums on indirect taxes. With this brief introduction, I present before you CA Hanish. Over to Hanish.
Good evening, everyone. I think we are very close to completion of 1 year of introduction of GST, and I can remember the midnight celebrations which took place for introduction of GST. I remember when we were really young, our elders would say that if something is done on a good day, right, that is repeated for the entire year. So on your birthday or on your Diwali or any special day, if you do something, if you read, that means for the entire year you are going to read, right? So get good habits, inculcate good habits and practice that on a special day. I think that is what has happened on 30th of June. GST was inaugurated at midnight, and after GST has come, all the days, midnight we are at office. First we were trying to fight with GSTR 3B, understanding what is 3B, how to file that 3B. The moment we thought that it is little easy, October, November, December, we had GSTR 1. We thought it is getting a little settled, and after that we had Tran 1 due date. After that we had Tran 2 due date. The moment we thought now it is a little easy session, e-way bill came into existence, right? And every time we think that something is proper, the due date of GSTR 1 moved from the 40 days to next 10 days, right? And the accounts of the clients never get over by 5th also, 6th also, forget so 9th also, 10th also. So somehow we are managing filing the returns, right? And I am sure 19th of July there is a meeting of council, GST council, and we will have lot more surprises to come our way. Some news reports, if we read, they say that more than 80 amendments have been proposed to the GST law. Actually, this session was planned to cover all the amendments which may come up in the budget session. Unfortunately, there were no amendments in the budget session. So what I have done is, the topic is recent update. So what I have done is, whatever circulars and important notifications have been issued in the last 6 months, from 1st January 2018 till now, I have tried to summarize those and break it into different portions, and whatever topic is relevant to that particular circular, we are going to discuss in detail about that circular. Any related issues you can feel free to ask. 8 o'clock sharp I will have to wind up because I have to travel and I have a train at 9:30. So I would suggest that if you have any doubts at a particular point in time, you please ask your doubts then and there itself, instead of waiting and then we don't get an opportunity to ask the questions at all. Right? Can we start? First we'll start with Circular 44 of 2017, which talks about tenancy rights. So the heading is how I have broken up the circulars. One circular itself might have clarified 4 or 5 issues. I have broken that circular into what is supply, what is the rate of tax, what is the type of tax we have to charge. So all these circulars, you see the reference might come up again and again because I have broken up a single circular into multiple topics. Right? So Circular 44 of 2017 talks about tenancy rights in residential dwelling. Right? Now, tenancy rights are also referred to as pagadi system, or in accounting terminology, in commercial terminology, we also call it as goodwill. So what happens in this case is an outgoing tenant collects money from the incoming tenant, saying that this is the tenancy right you are required to pay me for occupying this property on rent. Right? Or second case, the outgoing tenant surrenders his right to collect the money from the incoming tenant and asks for money from the landlord. 2 possible ways in which I can get consideration. Either I can get consideration from an incoming tenant, or I can surrender this right to the landowner and collect that money. Now the landowner is going to collect, or the building owner is going to collect that pagadi or tenancy rights from the incoming tenant. Clear? The issue is whether these are liable to tax or not. Right? The circular examines Schedule 3 and says what is out of Schedule 3 is only land and completed building. Tenancy rights are not forming part of land and completed building, so these are not covered under Schedule 3. Schedule 3 is those transactions which are neither treated as supply of goods, neither treated as supply of services. So anything covered under Schedule 3 is not liable to GST. The circular clarifies that tenancy rights are not forming part of Schedule 3 and hence it may be taxable, the first paragraph. Second paragraph, they say because it is not forming part of Schedule 3, it is a tenancy which will form part of Schedule 2. Because if you look at Schedule 2, tenancy, lease of immovable properties is covered specifically under Schedule 2. So they try to come to a conclusion that these tenancy rights will be liable to GST under Schedule 2. And they also say that on this tenancy rights, sometimes registration is required for which stamp duty is paid. The clarification given here is merely because the document is required to be registered and under a separate law you are required to pay stamp duty does not have any impact on the liability which is getting created in GST. Right? These 3 are very important aspects, because not just for the tenancy rights, assuming I have a land and I sell that land, it is not liable to tax because it is already covered under Schedule 3. But any developmental rights given on this land is not equal to land. So what the developmental rights are required to be registered under the stamp duty. The circular says, I am not bothered about what you have to do in stamp duty. What you have transferred is not land, but the rights in the land, it will be liable to tax. So though this circular has been issued in the context of tenancy rights, any transaction in immovable property, this circular is going to help us understand what are the reasonings based on which department might want to tax this transaction. Then they go on to say, there are 2 types of tenancy rights. The way in which I can transfer. I am the old tenant, how can I transfer these tenancy rights? They say, tenancy rights by outgoing tenant to the incoming tenant is part and parcel of renting of immovable property for residential dwelling, and renting of property for residential dwelling is not liable to tax, so the tenancy rights are also not liable to tax. A little surprising, because if an educational institution is giving transportation services to student, that is exempt. But if a third party contractor is giving the same service of transportation to that school, if they withdraw the exemption, can we say because the service rendered by the school is exempt, transportation services given to the school is also exempt? But that is what the circular is trying to say. Because renting of movable property for residential dwelling is exempt, the tenancy rights related to that is also exempt, is what the circular is trying to convey. Next they say, if the outgoing tenant surrenders this tenancy rights to the landowner, in that case it will be taxable. Right? According to me, both should have been taxable, right? Without getting into debate of whether land and rights in land are already covered in Schedule 3 or not. If we have to have a debate of that, that's a different aspect. But if the rights in immovable property are distinct from land, then, and if it is taxable, both will have to be taxed. The reasoning of the circular, I am not able to appreciate that merely because end use is exempt, anything incidental to that will also be exempt. Okay. Next, there is also another circular, Circular 35 of 2017, which talks about transactions between parties in joint venture. There they say, if an asset is required to be purchased by everyone, but one person purchases that asset and the other people only contribute towards that asset, this is a transaction in money and hence not liable to GST. So wherever there are reimbursements relating to a purchase of common asset, we can take advantage of this circular and say it is a transaction in money and hence not liable to GST. Clear? Electricity companies are not required to pay tax on supply of electricity. There is a specific exemption given for supply of electricity to electricity generation and distribution companies. But apart from generation or distribution of electricity, they also collect rent for meter. If somebody has not paid the money on time, then they have disconnection charges. They have some penalties which are collected from the residents. Now the question is, electricity is not liable to GST, but all these incidental charges which are collected by the electricity distribution company, is that liable to tax or not? Clarification has been issued under Circular 34 of 2017 to say electricity is exempt, but any other charges which have been collected by the electricity distribution company are not in the nature of electricity distribution and hence these will be liable to tax. This is a copy paste error, same thing is repeated here. Next, we have a clarification on high C sale and in-bond sale. Before we get into this clarification,
since discounts have exemptions, so the power they purchase from the power producer also must be exempt, because there is no opportunity to set off against the sale, right?
not because of this reason, but because that electricity itself is not liable to tax, not because I don't have an opportunity to set off, then educational institution and hospital auditors also should not charge them tax. Right? So not for this reason, but because electricity itself is not liable to tax, that purchase is not liable to tax.
Right? The composite supply.
Sorry, sir?
The composite supply, main supply is exempt. Incidental recovery also must be exempt.
Is it a standalone supply or it is a composite?
It's a composite supply.
Renting of meter is totally different from distribution of electricity.
It is not inextricable link to distribution of electricity.
But these are definitely different components of a same contract. So everything related to a transaction merely because electricity cannot be used without installation of meter does not mean both are composite supplies according to me. And also disconnection, it is a penalty. Already department have this beautiful word of withstanding, tolerating, not tolerating. In that they will cover and they will ask us to pay the tax. We have a very interesting situation in case of high C sale and in-bond sale. Now before we get into this circular, we have to understand what do you mean by a high C sale and what do you mean by a in-bond sale. When a sale happens, before the goods are cleared from the customs, that sale is called a high C sale. From the customs physical barrier, when the goods are not cleared, when the bill of entry is not filed, and I sell the goods to somebody else, which I had to take delivery of, and that other person is going to file a bill of entry, whether for home consumption or warehousing is separate. But before a bill of entry is filed, if any sale happens, that sale is called a high C sale. The question is whether this high C sale is liable to tax or not. Incidental to that, another question is, I have imported the goods, but if I have to import the goods, I have to file bill of entry. There are two kinds of bill of entry. There are various kinds of bill of entry. For our example or understanding, we will look at two kinds of bill of entry. One bill of entry is bill of entry for home consumption. When I file a bill of entry for home consumption, I pay basic customs duty and IGST and import the goods. It becomes part and parcel of Indian land mass. Otherwise, if I don't want to pay the duty immediately, maybe because I am importing the goods for the purpose of export, or I am under a SEZ scheme or a STPI scheme or a EOU scheme. Now they are being delicensed, but earlier. Then I have a private bonded warehouse. I can import the goods and I can store in these warehouses without payment of tax, without payment of customs duty, by filing a bill of entry for bill of entry for warehousing. Right? So there are two kinds of bill of entries: bill of entry for home consumption, bill of entry for warehousing. Now when I file a bill of entry for home consumption, it becomes part and parcel of Indian land mass. Whenever I sell it, I am required to pay CGST, SGST if the transaction is within the state, IGST if it is outside the state. The point is, if the goods have been warehoused, am I required to pay tax on that or not? Because the goods have still not crossed the customs frontier. It is in the custody of customs authorities itself. So what that, the warehouse is a private bonded warehouse, and this office also, or this conference room also can be declared as a private bonded warehouse, and I can get the goods here. So customs physically will not be located here, but these are under the supervision of customs authorities only. The question is whether high C sale is liable to tax or not, IGST, and both the parties. We'll take an example. I have a vendor in USA, I am importing some furniture, I have a customer who wants exactly the same furniture. Before taking delivery of these goods or before filing a bill of entry, I transfer all the documents of title to him, enter into a high C sale agreement and tell him these goods are yours. I purchased at 10 lakh, I am giving it to you at 11 lakh rupees. He will go to the customs authorities, he will file the bill of entry in his own name. The question is, am I required to pay tax on this transaction or not? Second transaction, I am in Bangalore, I have a private bonded warehouse, I have imported these goods, I have admitted those goods into my warehouse by filing a bill of entry for warehousing, and then I sell these goods to my customer. Laptops I had bought, I have sold these laptops to a software company when they were bonded, and the other person also has a private bonded warehouse, so they have also bonded these goods. Right? The question is, in these two scenarios, am I required to pay tax or not? Any thoughts on that?
Already you are paying IGST.
As of, I am asking you whether I have to pay IGST or not.
No, when you are clearing it in the bill of entry, you are paying the customs.
Yeah, I have not cleared the goods. In a high C sale, we will take one by one. In a high C sale, I being the customer who is supplying it to another customer, I have not paid IGST.
You have not paid. The person is making the bill of entry in this name, will be
Correct.
paying the customs duty and the IGST.
Correct. He will be paying customs duty only. He is not going to pay IGST. We have to look at it in two different ways. When I import the goods, I am not paying IGST. I am paying customs duty. A part of that customs duty is IGST. When earlier I used to import the goods, I was not paying excise duty. I was paying additional customs duty equal to excise duty. So today also, when I import the goods, I don't pay IGST. I pay a tax equivalent to IGST, which is part of the customs law. Right?
Even into the values,
We'll finish off high C sale. Taxable or not taxable?
Means you,
Not
it's not taxable between the intermediate person and the final customer.
Yeah, that's the sale we are talking about. I am in Bangalore, he is also in Bangalore.
So that is not taxable.
It is not taxable under the GST law. But when he files the bill of entry for home consumption, he is required to pay whatever duties are applicable to him. The reason is very simple. The reason is also being given in Circular 33 of
How will this
2017.
invoice be between this intermediate person and the final customer? Invoice will only have the value, and will it say exempt or what will it say? It will just say
That was my question actually. I will come to that.
Because we can
Right.
only ask you questions.
So GST, anybody can ask question. Right? Right. So it is not liable to tax because the goods have not crossed the customs frontier. Right? It has to come to India, only then it is liable to tax. This is also been clarified by customs circular. Now the issue here is, what are we trying to not pay tax of? IGST, correct? Or CGST, SGST. If both of us are in Bangalore, the tax which we don't want to pay is CGST, SGST, or if it is in different state, IGST. So taxes are applicable under which law? CGST, SGST law or IGST law? Which law is giving exemption by way of exemption and clarification? Customs law is saying, please don't pay IGST.
Because IGST on import is managed by Section 5 gives IGST law says during the import IGST will be managed by.
That's why I said there are two kinds of IGST which we are talking about. IGST as part of customs duty and IGST as IGST. Which one you don't want to pay?
Under GST law you are not paying.
Under IGST you don't want to pay IGST. Under customs can you say I will not pay IGST because it is IC sale? No, you cannot say that. If you are importing and paying basic customs duty, if IGST is applicable, you have to pay IGST. Correct? So we are not talking about customs duty. Let's not talk about IGST both the places. We will say IGST of customs duty and IGST standalone. Which one you don't want to pay? IGST standalone you don't want to pay. What is the charging section? 5. Section 5 of which act?
IGST.
IGST act. Now can income tax circular say don't pay IGST?
Sir, as it
That is
is
what
not
is happening.
paying taxes, it's getting a reply not paying taxes from the government itself is a very difficult thing.
Sir,
That is not one.
let's not complicate this. No, I just wanted to highlight some issue
Somebody
that
is saying don't pay, we will take
we'll be
it.
very happy. Okay. But now the issue is, am I required to reverse credit? Any place in GST where they use the word exempt, reverse credit. I am saying it is not taxable. Customs circular is saying it is not taxable. Am I required to reverse credit? That brings me to another interesting question. Interest charged by given to us by bank, right? Liable to GST or not? Not liable to. Why? There is a specific
entry in the exemption.
exemption notification. Exempt 17.2 says services used for exempt purposes you cannot take credit.
No, there is a specific entry in CGST rules to avoid the interest.
Excellent point. When was this entry introduced? 25th of January. 25th of January they have introduced an entry saying for the purpose of exempt supplies don't include interest income. That means before that what happened? From 1st July 2017 to 24th January 2018, are you required to reverse?
That entry is sort of explanation.
Not sort, it is explanation.
Then explanation because 11 says section 11 says explanation can be inserted which may as a
Excellent point. Can we read section 11?
11 is more.
I'll tell you. Section 11. Very interesting point you have got. I'll just read out that for you. The government may, if it considers necessary or expedite, so as to do for the purpose of clarifying the scope or applicability of any notification issued under 1 or 2. Is CGST rules issued under 1 or 2 of section 11? Not applicable.
No, but that notification, okay, not under 11.
So now the point is 1st of July 2017 to 24th of January 2018, am I required to reverse credit on exempt turnover which is equal to interest? The answer lies in whatever you have mentioned already. It is an explanation. And there are a lot of case laws which say explanation is retrospective in nature. Right? We can take that stand and say though it is introduced on 25th of January, it still has an impact from 1st July 2017 and hence on interest income we are not required to reverse credit. But that also brings a very important point. On all IC sales, we might have to reverse credit because exempt turnover definition includes even non-GST supplies. This is a non-GST supply. Yeah? So all the common credits relating to IC sale, reverse the credit. Next. Then we have sale of warehouse goods. If I have a warehouse where I have stored the goods by filing bill of entry for warehousing and I have sold the goods, custom circular again referring to 33 of 2017 in 46 of 2017 said it is taxable. In fact, it clarifies that assuming I have imported the goods and I have filed a bill of entry for warehousing, right? I am selling these goods to a DTA. In that case, when I am selling the goods to DTA, I will have to sell the goods, he will debond the goods, he will pay basic customs duty and he will pay IGST, which is forming part of customs duty. And because I have sold the goods to him, which is a transaction of supply for GST purposes, I will have to pay IGST also. So, for a single transaction, he will have to bear IGST under the customs law and he will also be charged with IGST because I have supplied the goods to him. For a single transaction, he will have credit of 18% multiplied by 2 or 28% multiplied by 2 depending on the rate at which I am selling these products. Right? After this circular was issued, they issued another circular. Okay? In this circular, they said IGST circular. This is a IGST circular, not a custom circular. First two were custom circular, which were clarifying the scope of IGST law. Right? Now, a custom circular was issued, circular 3 of 2018, which said that if the goods are warehoused, they have not crossed the customs barrier and hence warehouse goods, you are not required to pay tax. Right? You are not required to pay the tax. But then they clarified, that assuming you have imported the goods at 100, definitely you are going to sell those goods to your customers at 150. You are required to pay IGST under the customs law on 150 rupees and not on 100 rupees. Right? Because IGST is applicable even on value addition. Subsequent to this circular, law was amended. 8A, subsection 8A was added to 3 of Customs Tariff Act 1985 to say that when the goods are sold, when these are bonded, any value addition to these goods will be subjected to IGST. So now the position stands like this. If I have imported the goods and I bonded it and sold it, on the sale I am not required to pay IGST because goods have not crossed the customs frontier. But when I debond the goods, basic customs duty will be paid on the bonded value, but IGST will be paid on the selling price. So if the selling price is 150, I am required to pay IGST on 150. This is a case where circular has come before the law was amended. Correct? And unfortunately, this circular says this clarification is applicable only from 1st April 2018, not for transactions before. I am not able to understand why, if the laws of IGST has not been changed. What are we talking about? IGST whether to pay or not. Customs law you have amended. IGST law have you amended? If you have not amended any IGST law, how can the circular say that from today you are not required to pay tax and earlier period, though the law is same, whatever is applicable today, you are required to pay tax on that? I fail to understand. High C sale and sales when the goods are in a bonded premises will not attract any tax. But be careful, wherever we use the word exempt, we are required to reverse the credit. What are the credits which we are talking about? Documentation of all these transactions, we would have incurred some cost. Direct credit, you cannot take credit of that. Our fees, auditor fees, is a common credit. Rent, common credit. All these common credits have to be identified and proportionately we will have to reverse the credit of this. Right? Can we move ahead?
Invoice.
Sorry.
Invoice, how it should be between this. There is no GST on that.
Correct.
You will just give an invoice with the final value.
Bill of supply.
You will not give an invoice.
No tax invoice required because there is no tax applicable.
Okay, so it should be a bill of supply.
Next. Recently, a circular was issued 47 of 2018 which provides clarification on service of car involving goods and services. Now the issue here was parts of car are liable to tax at the rate of 28%. Okay, servicing is liable to tax at the rate of 18%. Now the question was, when I give the car for servicing, what is the rate of tax which is required? What is the rate of tax the service entity, which is the car, which is providing car servicing, is required to charge? Is it 18%, which is service, 28%, which is goods? So we are talking about composite supply. This circular surprisingly says, if the value of goods and services is bifurcated, goods will attract the rate of tax applicable on goods, services will attract the rate of tax applicable on services. What is happening to the concept of composite supply? Take a very simple example. I go to Adigas. Okay, they are under 5% without input tax credit scheme because they don't have a restaurant more than 7,500 declared tariff. I go there and I ask for parcel of food. They said, do you have container? I said, no sir, I don't have container. He will give me the container and he will charge me 5 rupees for that container. Whatever I have taken food of, he say 500 rupees or 100 rupees, container is 5 rupees. On that food what he has charged me, he will charge me 5% tax without input tax credit. On the container, assuming I have bought that container on a standalone basis, I go to Mamutpet and buy that same container, the rate of tax on that plastic container assuming is 18%. Right? Now, Adidas is required to charge me tax of 5% on both of it put together, or 5% on dosa and 18% on container. Single, so we have seen, no? All of us have seen this bill. All of us have taken parcel and paid for that container. Correct? Single bill with bifurcation. 18% on full value.
No.
Mixed supply. 5% on full. Full. That is what I understood earlier. And that is what everybody has been doing, because that is what is composite supply. Why is he giving container? Because I cannot hold sambar in the hand and come home. It is a composite supply, it is inside. I did not go there to buy container and by the way you give me dosa. I went there to buy dosa. He said, I cannot give you the dosa in hand. I will give it to you in container. This is a classic case of composite supply. Here they say, if you are able to bifurcate between goods and services, goods applicable rate, services applicable rate. Serving of dosa is service. Correct? Giving the container is goods. Bifurcation is available on the invoice. Right? Oh, they have totally confused us with, especially advance ruling, have totally confused us with what is composite supply. Same issue, one advance ruling authority says 18% tax and another advance ruling authority says no 5%. Third says please decide on case to case basis.
In this case, main supply is service.
Main supply is service.
As per law, they have to charge 18, applicable rate is 18% on the entire value.
Correct.
Because they stood to lose on the components, they have come out with this bifurcation analogy.
Correct.
It is very unfortunate because they themselves are not clear.
Definitely.
They are losing revenue.
Correct.
As per law, it is 18% on the entire value.
I totally agree with you, sir. It is actually, and it is a classic case of composite supply.
Whether that input credit is available for that container?
Sorry.
Input credit, because they are charging 18%.
First of all, charging 18% is wrong. Correct? Correct or not?
No, now what is the practice now?
5%.
Including that container.
Including the container. That is a composite supply. Now, sir is trying to say, what if I charge 18% on the container? Can I take input credit? The department is going to say, assuming I am the department officer, 18% you have collected from your customer, you should have collected only 5%. 5% is right tax, 30% is extra tax you have collected, forfeit that amount. Okay? And at 5% rate, no input tax credit, please reverse whatever credit you have taken. Please pay me along with interest and penalty. Yeah? Very simple. Now, priority sector lending certificates, REC certificates and other scripts. There was a confusion because a circular was issued, that circular was wrong. So they have given a final circular It says all these are classifiable under 4907. They have given the HSN code itself and will be liable to tax. Earlier the circular said 18%. Law was amended to reduce the rate of tax. They said it is liable to tax at the rate of 12%. But duty scripts will not be liable to tax. Okay, duty scripts received under foreign trade policy not liable to tax. Be careful again. Not liable to tax. Reverse. Wherever there is a turnover which is not attracting tax, please be careful. We will have to reverse the credit also. Okay?
Even a 0% rate also.
No, zero rated, the benefit is given that even though you are not paying tax on exports and supplies to SEZ, you can claim credit on the same. So the difference.
Refund issue.
Sorry,
Without refund.
I didn't follow. We are mixing couple of issues. Point one, there is a difference between exempt supplies and zero rated supplies. The difference, the common point is in both the cases I don't pay tax. But the differentiating point is in case of exempt supplies I have to reverse the credit. In case of zero rated supplies I am not required to reverse the credit. That is concept one. Concept two is refund we are not getting. Correct? No? That is another issue. We will.
If there is only zero rated goods it is selling, then you can't refund the.
No, definitely we can. You are applying for refund, you are not getting refund is different.
Yeah.
But you can apply for refund. Yeah, and now refunds are coming. Actually, it is. So rebate is really very fast. Rebate of taxes paid on goods is really very fast. But where we are applying for accumulation of credit or taxes paid on services, that is taking some time.
Sir, duty credits, those are the things for completing your export obligation, you get some benefit in terms of imports who are not paying the duty, right?
Yeah, no, those are that EPCG and advanced authorization you are talking about. These are MEIS and SEIS, Manufacturer Exporter in India scheme and Service Export in India scheme. There, if you export goods to certain countries and you get the money in convertible foreign exchange, 2% to 5% of your export, you get duty scripts which can be used for import of goods without payment of basic customs duty. Right? If you are not importing goods, you can sell it to somebody. On sale, you are not required to pay it.
Is this not similar to the transfer rights, tenancy rights? The tenancy rights is taxable, is what we
Right.
understood in the first line.
Right.
This is also an intangible.
So there, even it is not
It is not that you are saying.
correct.
It is the department is saying. I am just saying that it is analogous to the tenancy rights sale, which is taxable, whereas this is exempt.
So they have exempted it by way of a notification. If that exemption would not have been there, the rate of tax would have been 12%. In fact, this no exemption 122A, whenever there is A, B, C, D, that means there is an amendment. Earlier they would have given 1, 2, 3 only. In October somewhere they have introduced this 122A. Before that it was taxable. Supplies of duty scripts before 12th of October or something were taxable. From October 12th they have exempted the sale of duty scripts. Can we move ahead? Yes.
Coming back to the Kaligas example, since we are giving one single bill, it is chargeable at 5%. Otherwise, it is separately to charge. That's
The
not
composite supply does not talk about whether you are giving single bill or multiple bills.
Okay.
It is saying is something incidental to other.
Okay.
And where first one is primary and other one is incidental. If that be the case, whether invoice are separate, price are separately given or not, it is a composite supply only.
No, but respective rates you had mentioned actually at
So that the department has clarified. I am saying the department clarification is incorrect. Department has clarified respective rate.
Now, how to charge it? Now, separately we have to charge it or we have to go for 5%?
5%. According to me, it is a composite supply. It is not anything apart from that. If that were to be true, that I can bifurcate and get away with composite supply, wherever my principal supply has a higher rate of tax and the incidental parts have a lower rate of tax, I will give a separate invoice. Same contract, separate invoice. The entire purpose of composite supply will get defeated. Whether same invoice, separate invoice, do invoice after 10 days. As long as that incidental part is part of the principal supply, it is a composite supply, it will attract the rate applicable to the principal supply only. Clear? Yes, please.
We are selling electronic components. Some are chargeable 5%, 18, 28. So we will charge 5 after.
We are charging
Right.
freight also.
So what will be the rate?
Initially, there was one FAQ which was issued, and I thought that was very logical. They say if you are charging freight, can you apportion it? On what basis is freight charged to you?
Weight.
Weight. That is the good parameter. In costing, in CA final, we read something called as cost driver. What drives the cost? If the weight drives the cost, that is the basis. 5% what is the kg, 12% what is the kg, 18% what is the kg.
In some cases it will be around, say, for
No, you know the weights of each of
weight
the.
and size that differs.
If nothing can work, then do it based on turnover. If nothing works, if there is one or the other way in which you can do it, use that way. If you are not able to, based on 5% turnover, that much amount of freight goes to 5, that much, this much goes to 12. There is no correct rule here. It is all approximation. You have to show that you have approximately
What we
done.
will do, we will apply higher rate.
The highest rate, 18% you are going to apply. See, that's where the other person, whether he will be able to take credit or not, comes into question. If you charge a higher, you are being conservative, so no problem for you, you are collecting and paying. But for the other person, has he paid the correct rate of tax? That in VAT we had issues, I am not sure in GST we will have this issue. Hostel services by a trust. Circular 32 of 2018 clarifies this. Is it liable to tax? A trust, a charitable trust, is running a boys' hostel. Is it exempt or taxable? Sorry? Difficult to. They have 100 rooms.
No, it depends. Earlier registration, what is their objective?
They have 12 AA registration.
And if that hostel falls under that charitable activity,
No, you have to tell me that. Under income tax it may fall. Under GST, hostel is not a charitable activity. If you look at the definition of charitable activity in GST, it is very small when compared to income tax definition. It is not the same definition. If whether you are a charitable institution or not, you have to refer Income Tax Act. But whether what you are doing is charitable or not, you don't have to refer Income Tax Act, because charitable activities definition is already there in the notification itself, which is very, very restricted. So the circular clarifies that it is not a charitable activity under the GST law. It might be under income tax law. It is not a charitable activity under the GST law, and hence it is taxable. But general exemption. What is the general exemption? If the declared tariff is less than 1000 rupees, you are not required to pay tax. But in hostels, when will we have declared tariff 1000 rupees per day? Correct, no? That declared tariff is for short-term accommodation. Hostel is for 1 year, 2 years, 3 years, depending on the course. I am not sure how we are going to apply this declared tariff of 1000 for hostels. Yeah? Yes, please.
What is, how do we say declared tariff?
Excellent. I have another circular relating only to declared tariff. Some 10 questions I have for you. Only on declared tariff. Correct? We'll come to that and I'll ask you. I'm silently escaping from wherever I don't have answers. Right? There is a specific circular which was issued on declared tariff. We'll discuss that. First it was a FAQ converted to circular. Yes, please. Yes, Rajesh.
So, I'm an educational institution.
Okay.
Along with the fee, they collect hostel fees
Correct.
and other things are also.
Correct.
Stay, they cost more.
Correct.
That point of time, hostel fee.
Supplies by educational institution to student exempt. We were not talking about educational institution. We were talking about charitable trust.
Here, if there is a composite supply, yes, if you are bifurcating the fee, then there is a problem.
Now let's come to that. First, is it clear? Educational institution could be a charitable institution, but educational institution can be formed without being a charitable institution also. They don't have a 12 AA registration maybe.
Exclusively in hostel.
Sorry?
Exclusively in.
I have 101 activities. One of the activity is hostel.
Sir, they refer to declared tariff there. They may be referring only to accommodation in hostel.
Yes.
If that is the case, it is not falling in section 7 at all, scope of supply.
Why is that, sir?
Where will you fit it in section 7?
Business you are saying.
No, yeah, it is not falling in 7(1)(a), B, C, D. I am
Why do you say it is a supply for consideration?
See, all forms of supply of goods or services are both, such as transfer, barter, exchange, license, lease. It says in the course or furtherance of business. An educational institution is not.
No, I am not talking about educational institution. Charitable trust. Educational institution, there is a separate entry itself.
So this may be an example where a charitable trust is running a student hostel
Correct.
along with the educational institution.
If it is running an educational institution, then it is a little different. But if it is only running a hostel, it does not have
Only running a hostel, it will not be a hostel. It will be, something like, lodging house or something. It cannot be called a hostel. Hostel mostly refers to a place, accommodation provided to students and where students stay.
If you come to that Woodshed Road, there is a signal on the left hand
On the
side.
left hand side,
Yeah.
you find a multi-story building.
Correct.
And you see lot of women students staying there.
Correct.
Okay. That is a student.
But it is not an educational institution.
If it is not an education institution, you may have to remove.
So there can be hostels which are not educational institutions. Correct? No?
They are
In
wrongly
fact,
called
now in Goa and all the holiday places,
They are wrongly called as hostels.
they are wrongly called as hostels. Like CVD.
They are camouflaging the services, accommodation services.
Correct. I agree with you, but they are called hostels, and that's where they have taken this language from. We'll move ahead. Next. Circular 32 of 2018, there was an issue on services of elephant rides, camel rides, boat rides. Are they transactions of transportation of passenger service? Right? This was the issue before them. They said it is not passenger transport services, it is joyride services, and hence it will be liable to tax at the rate of 18%. Somebody would have asked that out, so they are clarifying this. Now another issue under Circular 32 of 2018, if you look at the exemption notification, it says clinical establishment rendering services to the patient is not liable to GST. Medical practitioners rendering services to a patient is not liable to GST. They have been exempted from GST. But if a doctor is appointed by the hospital, okay, it is not appointed by the patient. A senior consultant is appointed by the hospital saying there is a difficult case, can you come and treat this patient? Okay, and for that the doctor charges the clinical establishment. He is not charging to the patient, he is charging to the clinical establishment. The question is whether doctor is required to pay tax on this or not, because exemption is given only when the charge is made to the patient. The question is whether it is exempt, whether when the doctor charges to the hospital, is it liable to tax or not. Luckily under 32 of 2018, they have said that this is also a health service, and hence the services of doctor to the hospital is also not liable to tax. Like Madam rightly said, very few places they are saying it is exempt. Let's happily take those exemptions without questioning. How can you give this exemption when law itself does not allow you to? So we will take this exemption. The second question here which was asked and for which clarification has been issued is, the hospital is charging the patient 1 lakh rupees. The doctor is charging 75,000 rupees to the hospital. Is hospital required to pay tax on this 25,000 rupees of retention money? Even here they have clarified this is also a healthcare service and hence it is not liable to GST. This is clear. So doctor to the hospital and the retention money of the hospital, both they have clarified it's health service and hence we are not required to pay tax on this.
This article does not say anything about the recipient. It says about the healthcare services for the clinical establishment or paramedics. That's what it ends. It's not say about
It says the exemption is qua service and not qua the recipient. It is exemption is qua service.
Then
So
it's
that
fine.
service to whomever provided, it is exempt.
When you say
Under notification is.
under notification it says health services provided by, okay,
To whomsoever.
yeah, and it does not say whomsoever.
That's not saying.
But doesn't say,
the
it gives a feeling and interpretation is the exemption is with respect to the service.
If we take it that way, then yeah.
And the same thing referred in the classification.
In the circular also they say it is a healthcare service. That is what. Yeah. Good point, sir. Next, in the same circular, they are talking about food supplied to and by hospitals. Here they say food supplied to hospitals, there is no exemption. It will be taxable. Food supplied by hospitals to patients is a composite supply and hence no need to pay tax. Food supplied by hospital to other than patients will be liable to tax because it is not forming part of the composite supply of health services. Yeah. So if hospital is running a canteen, if it is going to an inpatient, not liable to tax. But if relatives of that patient are also having food at that canteen, it will be liable to tax. That is what it is trying to say. Mess facility at college, similar to the food provided. Mess facility at college, circular number 28 of 2018. Here also 2 circulars are issued and corrigendum was issued. Finally, supply of food or drink by mess or canteen, they have clarified, is liable to tax at the rate of 5%. So any mess or canteen in educational institution will be liable to tax at the rate of only 5%. Next we have circular 27 of 2018, specifically on accommodation services and declared tariff.
This is only for volume, 5%.
So there's one doubt here actually, I didn't want to touch upon that, but since you have asked, if you look at that entry, it nowhere says, in the rate notification, it nowhere says mess and canteen will be liable to tax at the rate of 5%. It only says restaurants are liable to tax at the rate of 5%. The question is whether mess and canteen are restaurants or not. So what do you mean by a restaurant? Restaurant is, I own the premise, I decide what food has to be served, I decide what is the price at which it has to be charged, all the approvals will be in my name. Somebody comes, I serve them food. That is what is restaurant. In case of mess or canteen, more often than not, it is somebody else's premise. Those guys takes all the approval. They will tell me what has to be served on a particular day. We will negotiate, but it is their price at which I have required to serve. So now these mess and canteen are these restaurants, and will they enjoy this 5% or not? Like we have a lot of these food courts in tech companies. Those are also mess and employee canteens only, right? Or industrial canteens. Can they take this benefit or not? Unfortunately, I think the rate of tax is 18, but because this has been clarified in the case of educational institutions, let the educational institutions take the benefit, but other people may not be able to take the benefit because the rate actually according to me is not 5%, it is 18% only.
We should not educate them to do that.
Sorry?
Let us not educate them to do that. Increase the rate of tax.
So for restaurants,
No, but
Applicable rate itself is 18%. He's asking, let us not educate them. Applicable rate itself is 18% after catering.
that's where I was coming to. In fact, Sodexo and all have represented this case, saying that why don't you reduce our rate also from 18 to 5, because Sodexo also runs all these industrial canteens or canteens for software companies, where the software companies are not able to take the credit, this food and outdoor catering. Charging 18%, software companies are rejecting their bill. So a recommendation has gone from them itself saying, if educational institutions are asking to reduce the tax at 5%, please reduce our tax also at 5%. So everybody is aware, and as of now they are charging 18% only actually.
With that, excuse me, input credit is available for this 5%.
The 5% entry itself says without input tax credit. So
Instead of 18%, they are charging 5%.
instead of,
It's supposed to be 18%. They charge 5% special.
but the entry referred in the circular is the entry which says 5% without ITC. The circular says you are covered under this entry of 5% without ITC.
so restaurant is 5% and canteen is 18%.
Should be
Even
18.
if it is an industrial canteen which is not outsourced, I mean an in-house industrial canteen by its own employees,
Will also be 18 only.
will also be 18%.
This entry is clarification for the contractor who supplies the food at the location of education.
Is it for the outsourced or is it for fleet?
Is it a restaurant?
Giving it to its own employees.
Is it a restaurant?
It doesn't come under restaurant. It comes under canteen.
We'll have to read between the lines because that is specifically for restaurant.
5%.
5%.
5% is specifically
For
only
restaurant.
So for all other services it becomes.
Unfortunately,
This sites for the contractor who supplies the food at that place, or it's not for the, see, as man said, when school itself takes care of supplying the food.
see, in school anyways, any service provided to students is exempt. So this question will not arise. The question will arise in say company, software company, where they are charging money to the employees for having food which is being operated by them itself. That is where this question will come. Is it a restaurant?
So if they give free,
Yeah, I have a last slide on transactions between employer and employee to pay tax or not to pay tax. Okay, there I don't mind skipping that slide. If you go to schedule 3, okay, if you go to section 9, we'll go in sequence. Section 9 says supply of goods or services or both is liable to tax. Schedule 3 says whatever I listed down is neither goods nor service. So I am out of section 9. Serial number 1 says employee to employer in the course of employment is not supply of goods, not supply of services. But employer to employee is not given. That means any service by employer to employee is liable to tax. 7(1)(a) says supply for consideration is liable to tax. If anything is given free, is not covered under 7(1)(a). But there is 7(1)(c) which says supply without consideration is also liable to tax if it is listed in Schedule 1. Schedule 1 says transactions between related party without consideration is also liable to tax. Right? If you go to section 15, explanation talks about related party. There they say employer and employee are related. If you read all these things, services by employer to employee without any consideration will get covered under Schedule 1 and hence it is taxable.
it's not without consideration. It's
Free.
an employment. It's in the course of employment. I get a.
Okay. I'll come to that. You use the word free. So that's where I come to this. If it is free also, I am required to pay tax. What is the value? Section 15 will decide the value.
Market value.
Open market value, all those things will come. Now, does that mean supply of food to employees free of cost is liable to tax? What is your view? After reading so many things,
Actually, logically it shouldn't be taxed.
Law-
But by
law does not go by logic.
Yeah. Law and
Correct.
logics are not connected.
Correct.
Make
So-
it as part of CPC.
Sorry?
Make it as part of CPC.
No, what we can make it, I am not saying. I have done already what I have done. Audit guy has issued the notice.
No, if it forms part of my employment contract, I need to.
No, it is not. That is why we are discussing.
Yes,
Taxable?
actually.
Why, sir? Why taxable? Because these services can be given by some third party also. That means this is recognized service. Correct, no?
So transactions, you don't know now transactions between
Because of-
related parties without consideration also comes out.
Okay. Now, if all of us have heard of Sulabh Shauchalaya, we go take a leak, pay money to them. Correct? If you want to go to toilet, use toilet, paid toilets are there where I pay a rupee and use their toilets, finish off my job and come back. Correct? If we say free food to employee is liable to tax, don't you think employer is also providing toilet facility? Free of cost? Taxable? Where? No, it is not part of cost. I have staff with me, no employment contract. So please come work, go. The labor,
Basic amenities is a part of labor.
the circular says, I am not bothered about what Stamps Act says, what Labor Act says. Are you employer? Am I employee? Between us, free transaction, 715 taxable.
No, supplementary of provision of this, what is it? Public conveniences.
Public convenience.
No, that's okay. No, I also have
That case,
employee.
office chair, table.
I was coming to that next part of that only. Correct. See, it might sound really absurd and I can see how irritated you are with what I am telling. I want to get that because
Air conditioning.
if you don't answer this, anything given to employee is taxable.
Air conditioning.
Sir, actually, my son has got an offer from QuickBooks. So his appointment letter says, of course, his basic After that, that's the last line. Other benefits. I went through the annexure what the other benefits are. There is no definition of other benefits. They have quantified one amount, which is more than that 5,000 into 12.
5,000
Previously, some up to 5,000, up to 50,000 or something.
Excellent point you have touched. I'll come to that also. Gift.
So it is more than that amount. So I asked my son, what is this? Some free things like, he's picked up, drop, food, coffee, some juice, snacks, whatever you call it. So what is this? If my son wants that, and he has to pay the GST on that or?
I think QuickBooks is the next client which I should be thinking of. Right? Okay. Now the question was, is it liable to tax or not? Okay, and then we go to this 50,000 limit also. Can I apply this limit of 50,000 and say no tax applicable because the value of accessing the toilet is less than 50,000 rupees? Value of the food what I am giving all put together is 50,000 rupees.
No, the accessing the toilet will come under the definition of infrastructure. Like, if there is an employer-employee relationship, there must be a basic minimum infrastructure the employer is expected to provide to deliver the services.
How do we decide what is basic? For IBM employees,
Okay. Yeah, Macintosh machine may not be the basic thing, but
no, who decides that? Who decides what is basic? India survey which says 31 rupees per day is sufficient for a person to survive?
That is the UPA government, sir. The present government doesn't say.
No, I am saying it will say 50, 100.
It is not service to employee at all.
What is it, sir?
Without that facility, employee cannot work. There, the employer is taking it is for his own benefit. There is no service to employee there. Canteen, yes.
So how I view it, sir, something similar to how I view it.
We can also say, sorry to.
Yeah.
Can an A employee get say 10 lakhs?
Excellent.
Can B employee gets 25 lakhs?
Correct.
So what is fair is market driven based on your negotiation skills. So I will keep only 10 lakhs as something like an employer-employee kind of a thing, and anything above that I will charge GST. We can extend that.
My view, how I am looking at it is, if I have to ask employee to work, I will have to give certain benefits to all the employees, not to specific employees. If I give it to specific employees, it's different. I am giving common amenities to all the employees. Anybody who comes, whether he pays 8,000 rupees or 80,000 rupees, whether he is a peon who is not having a cabin or a manager who has an exclusive cabin. When I give common services, it is part of the employment contract. The employment contract is broken into two, whether it is written or not written, because contract law allows for oral agreement also, right? Now whether written or not written, written is very good, but if it is not written also, this is not a supply at all, but it is a consideration for the supply given by the employee. I can give employee services in the form of, I will give you 1 lakh salary, or I will give you 90,000 salary plus food plus X plus Y plus Z. What are all these? These are all consideration paid to the employee for employee rendering services covered under Schedule 3. If it is for the common benefit of everyone, it is not liable to GST. But if it is for specific persons and the amount is recovered from the salary, if you have food, 50 rupees will be deducted from your salary. If you take company transport, 100 rupees will be deducted from your salary. These will be liable to tax. But transportation will be given to everyone who stays beyond 5 kilometers. Not liable to tax. Because it is a consideration for a supply given by the employee covered under Schedule 3 and hence not liable to tax at all. This is how I view this transaction. And based on that, toilet facility also, all of them I saw got visited. What nonsense are you talking? Not liable to tax. Clear? Are we clear on that?
Yeah.
Okay. Now, just once again, I'll finish this. I have seen a lot of people say all these amenities or whatever common, up to 50,000 rupees, no tax. Please check. Gift can be given only once. It cannot be given every day and not 3 times in a day. Correct, no? Gift can be given only on a occasion. And on that occasion when a gift is given, though it is a transaction between employer and employee covered under Schedule 1 without consideration, I am not required to pay tax if it is a gift up to 50,000 rupees. But a diamond merchant in Gujarat, if he gives a car to his employee free of cost, 2.5 lakhs and above, it will be liable to tax because it is beyond 50,000 rupees. Clear? Cash given to an employee on his birthday, 1 lakh rupees, liable to tax or not? More than 50,000, no? Money is not goods. So there has to be a supply of goods. Money is excluded from goods. So cash given to an employee, though it is beyond 50,000 rupees, will not attract GST. Sorry?
That's totally cash, no pen.
Income tax will come to your rescue or come to add to your miseries, whichever way. I think income tax, what is the limit? 5,000. So that will create a problem. Sir, you had something.
Yeah, suppose an Indian employee who is working in a company, IT company in India, he has sent for rotation 2 years outside India, and here his accommodation, food, everything is taken care by Indian company. So
By Indian company.
Specific employee here, but he is working outside India. In that case, what will happen for this GST burden?
So I'll just repeat what I have understood. There is a contract in USA for which this employee is deputed to USA, and all the costs related to this employee are also incurred by the employer. So 1 lakh rupees is the salary which the employee is getting, and apart from that all these benefits he is getting.
Yeah.
These are not benefits, I would say. These are part and parcel of execution of employment duties outside the country. So it is a supply between the employer and his customer, not between employer and employee. We can move ahead. Next we go to Circular 27 of 2018, which talks about declared tariff. Now this word declared tariff is important because the rate of tax on accommodation is based on declared tariff. If the declared tariff is more than 7,500 rupees, the rate of tax to be charged is 28%. That is why this declared tariff definition is relevant. If the declared tariff is less than 7,500 rupees, then the rate of tax is 18%. Is this clear? So that is why this declared tariff is very, very important. Now, like our friend pointed out, what do you mean by declared tariff? Under the luxury tax, some of the states required that we have to publish the tariff, and we have to give a copy of the tariff to the department, because the luxury tax depended on the slabs based on which you are charging your customers. What you are actually charging, they are not bothered. If a room is more than 7,500 rupees, you please pay me 2%, 3%, 5%, 10% as luxury tax. Right? Whether in some states, in fact, whether it is vacant or it is occupied, you are required to pay the luxury tax on rack rate straight away. Right? These are also called as rack rate. They have adopted the same principle that taxes will be applicable based on the declared tariff. But now luxury tax is not at all there. So where do I declare this price? The circular says wherever you have declared. If the guest comes to your hotel and you show a rate card, if you have a website where you show the price, wherever the service of accommodation is offered to somebody, that price is called declared tariff. And if you have multiple prices, highest of the multiple prices will be treated as declared tariff. Based on that, you are required to pay the tax. Right? This leads to a lot of confusions and complications. Right? If, say, suppose I have a suite room, okay, the price of that is 10,000 rupees. Normally, I sell it at 10,000 rupees. Somebody got some offer online, make my trip, this, that, some voucher code, coupon code, HDFC Bank was giving some discount. Finally, the price at which he got that room, which I am raising the invoice of, is only 5,000 rupees. What is the rate of tax to be charged? 28% or less than 28%? Declared tariff is 28%, is more than 7,500. Whatever might be the price at which you have given does not make any difference. What is the category of room? 28% category. Even if you have collected 1,000 rupees, the tax applicable is at the rate of 28%, but not on 10,000, which is normal value, on the transaction value, which is 1,000. So tax is applicable on the transaction value, but the tax rate is determined based on the declared tariff. Is this clear? But what is this declared tariff? Is it MRP that is inclusive of taxes, or can I have exclusive of taxes 7,000? If I add tax, it becomes more than 7,500. So I have my tariff 7,000 rupees, 18% tax. The moment I apply 18% tax, it becomes more than 7,500 rupees. So this declared tariff should be excluding tax or including tax? They have clarified that this should be excluding tax. Is this clear? Next. So suppose regularly I give the rooms at 7,000 rupees. Rate of tax is 18%. The time of New Year, when there are a lot of bookings, suddenly I increase my price from 7,000 to 10,000 rupees. Okay? Does that mean for the entire year I am required to pay 28% tax? The circular says, if you have specific seasons where you increase the rate of if the rate per room, those seasons 28% will apply. Balance years where you have a lean period 7,000, 5,000, that is the declared tariff. So you can have declared tariff for rooms per season basis also. That will decide what is the tax you have to discharge on the value collected from the customer.
Is it only season based or like weekdays and weekend based?
It says season.
Weekday it's less, weekend it's more.
Good point, but I don't see that in the circular. But the point is, you know what here, they call some terminology, bar rate, best rate available, best available rate. The rooms are supplied. The declared tariff is not decided on a standard price. Earlier we could go to a hotel, 5,000 rupees the price, they will give us the tariff, we will negotiate and pay 4,000 rupees. Right? But now, because all these happen online, it is based on demand and supply. If there is no demand at all, Taj will also reduce the price. But if there is a lot of demand, first room you would have booked at 10,000 rupees, your friend also wants to accompany you on a holiday, and 50 people are looking at the same property at the same time, that 10,000 within minutes will become 25,000 rupees. Same property, same day, it will become 10 to 25,000. This is called best available rate. Based on demand and supply, the rates on the website keep increasing and decreasing. In that case, to fit a declared tariff practically becomes little difficult.
So in this case, the declared tariffs vary depending on the weeks.
Right.
Saturday, Sunday, throughout the year declared tariff is high. Other days declared tariff is low. You must be getting the benefit of that circular.
Logic is there, but is it a season? If you look at season, it is like a continuous stretch of period. But when is there?
But when the declared tariff itself varies depending on the days, that itself is a declared tariff. That is the rack rate.
Correct. Like, agreeable, but I'm saying circular may not help, but we'll have to.
Risk is there.
And this bar rate also will create some issue. Another interesting point. Okay. Assuming there is a FIFA World Cup which is happening in Bangalore. Assuming, okay, whether India participates or not, they have got at least the World Cup teams here. Okay. Now, I being a football follower, one of the match was happening in Mumbai. I booked the ticket also. After 6 months the match is happening, and I booked the accommodation also. And that time the accommodation of the hotel, which is right next to the football stadium, even if I don't get the tickets, I can go to the terrace and watch the match. Okay, that kind of very next to the football stadium. They did not know that football World Cup is happening here for some reason. Okay, they did not increase the rate. They gave me a rate of 7,000 rupees. I took that, they charged me 18% tax. Okay? When the days neared, they got to know that there is a lot of demand. They increased the rate from 7,000 to 10,000 to 20,000 to 50,000 to 1 lakh or whatever. Point is, it became 28% category. Correct? Now, I have booked 6 months before, but the date is the same, 25th of December. He has booked 10 days before. Okay, date is the same, 25th of December. On 25th of December, what is the declared tariff? More than 7,500 rupees. Now, if somebody does an advance booking, the question is, am I required to charge differential tax because the declared tariff has increased?
The point of taxation is the point of booking.
Excellent point. This circular also says, that time of supply will decide the rate of tax. Now what is time of supply? Supply of room is happening on 25th of December. But if we go to time of supply provision, it says receipt of money or completion of service is time of supply. We can take that benefit and say time of supply is the time when I have paid the advance. If I have paid full advance, the rate of tax is going to be 18%. But if I have paid partial advance and said the balance amount I am going to pay after you render the service to me, first part is going to be charged at 18%, the balance part will be at 28%. Some hotels will have to take care of partial advances and also include in their contract that if there is any change in rate, I will be factoring that and charging it to you. Generally what is agreed is all inclusive rate. But when the declared tariff increases on that particular day, hotels might have a problem. So, extra bed provided in the room. Room rent is 7,200 rupees. Strategically they have decided. 7,200 rupees is the room rent. Extra bed 500 rupees. If I charge extra bed, it becomes more than 7,500. Is it liable to tax at 28% or 18%? 18%. So the main supply is less than 7,500, right? Extra bed is only addition to it. The rate of tax applicable to 7,200 is also applied to extra bed, but don't add the value of extra bed to the declared tariff. Yeah? So declared tariff is less than 7,500, it will attract 18% only. Right? Different declared tariff, highest will be considered. Seasonal declared tariff, time of supply determines the rate of tax. Upgrade to higher declared tariff room. Somebody paid 7,000 rupees for a particular room. Okay? For some reason I upgraded the room, okay, to a suite room, which is liable to tax at 28%. What is the rate of tax I have to charge on this person who has paid me 7,000? 28%. Because he has been offered a room which has a declared tariff of 28%. Rate of tax is determined by the classification of the room. Tax is applicable on the value. So tax is applicable on 7,000 only. But the tax has been computed at the rate of 28% because what has been offered to him is a room which attracts 28% tax. That is what has been clarified. And they have also clarified declared tariff excludes taxes. They have additionally clarified rooms on rent at hospitals are part of healthcare services and hence not liable to GST. Sorry,
Food you said if it is supplied to patients related.
Patients related.
There are also rooms may be used by relatives, but
if it is given to relative, see, if it is given to patient and relative is also staying, it is part of healthcare service that somebody takes care of it.
yeah.
But specifically rooms are available only for relatives. It will be taxable because it is not forming part of healthcare services.
Here you said it, what is this then? Rooms and on rent at hospital is like
Only for patients.
Okay.
So actually, doctors, they may have a friendly understanding between themselves. Suppose hospital A is overbooked and there is a hospital B owned by his friend which has got one or two rooms which are vacant. The original doctor only will consult, that is warning of hospital A only to do the consulting. But since they are close by the two facilities, suppose the patient is put in hospital B, which just provides the rooms alone and does not provide any other service.
Taxable. Taxable.
Taxable.
Yeah. Because that hospital is not giving any hospital services to that patient. He is going on only accommodation. Can they do that? I am not sure. Clinical Establishment Act requires that every patient who is admitted, they have to create a file with all the medical records, all those. So, can they admit a patient legally? I am not sure. Now, another issue in relation to hospitality sector was SEZ is located outside India for tax law purposes. Okay, they receive services from a hotel because the employee is staying in a hotel. Okay. Now, if the property is located, if the immobile property is located in a state, hotels charge CGST, SGST. Whether you come from Bombay, you come from Delhi, wherever you come, because the hospital is located, the accommodation is located or the hotel is located in Bangalore and the provider of service is also in Bangalore, he is going to charge you CGST, SGST, even if you give a GST number of Bombay, right? The question was, when these supplies are made to SEZ, is hotel required to charge IGST or CGST, SGST? If we are charging tax, we will come to exemption also a little later. If it is CGST, SGST, no exemption. To SEZ are zero rated, not from SEZ, to SEZ. There are certain conditions to it, we will discuss one by one on this, but accommodation, you are right, you can give it under section 16 also. But lot of hotels had a resistance to give, because for them, they said, for me I have a specific rule which says, because I am owning a immovable property and I am located in a particular state, my system has been configured, any customer comes, CGST, SGST, that's all. I don't have IGST at all in my books, because all my services CGST, SGST. The question is whether when these accommodation services are given to an SEZ, are they required to charge IGST or CGST, SGST?
IGST.
Sure, IGST? Anybody says CGST, SGST? Nobody? Very few? If you look at the scheme of IGST law, section 7 and section 8 says how to decide whether a supply is interstate or intrastate. Section 7 says supplies where the place of supply under 10, 11, 12, 13 is in one state and the location of supplier is in another state, it is a IGST transaction. But where place of supply and the location of supplier is in the same state, it is an intrastate transaction. Section 7 and 8 also says that if supplies are made to an SEZ, it is an interstate transaction. Section 7 says that, and section 8 says supplies to SEZ can never be intrastate transaction. Now, there is a conflict between 7, 8, 10, 11, 12, 13, that is what the circular says. According to me, there is no conflict. Section 7 and 8 will override 10 and 11 because the permission to enter 10 and 11 is given only by 7 and 8. But if 7 and 8 itself says supplies to SEZ is interstate, it is interstate. But this was a doubt. Even an advance ruling was filed in the state of Karnataka and they had clarified, because hotel is a immovable property located in a state, service provider is also in that same state, it will be a CGST, SGST transaction even if supplies are made to SEZ. Thankfully this circular has come. Sorry?
No, what is the doubt? It is very clear in section 7 that it is only...
Not enough. Sir, ma'am, our minds it is clear. Officers' mind this issue was there. Hotels' mind this issue was there. You will not believe, some of my clients also, it was really very difficult for me to convince them that it is not CGST, SGST, it is IGST. It was really very difficult for me to convince them.
And why is it not exempt basically?
I will come to that. Once we have admitted it is interstate, and that is what the circular also clarifies, now we have to see when is the exemption given. Exemption is given.
1 minute, you said some advance ruling, so what is that?
Advance ruling says it is CGST, SGST.
Okay, so it is against the law, what is it?
Against the circular and the law. Okay? They have
Correct
interpreted.
now. The advance ruling or the section, which is correct?
Definitely section.
Interstate.
But it is only interpretation, but I think it is a correct interpretation.
So what is the fate of people who have taken advance ruling?
Sorry, I didn't get you.
Advance ruling is binding on the SEC.
So that's what I'm saying.
And on the department,
So
in
what-
that case.
So what is the
And the
fate of-
system does not allow you to file CGST, SGST when the other person is SEZ. It automatically says IGST. Sorry? Writ? No, I will accept CGST, SGST. If I am the hotel, anyways the other person cannot question me because even he was party to the advance ruling.
So
Correct.
this person will buy a bill on CGST, SGST, and some other person will do IGST.
Correct.
Because it's not binding on it.
Correct.
GST one don't accept at all.
It will not accept at all.
Correct. That was
In fact, even I had an occasion to argue for one of my clients saying it is IGST and not CGST, SGST. Even they wanted to take that clarification. and I brought this point up. They said the system is wrong, don't go by the system. That was one of the response. And second response, the SGST officer was very, very confident in the state where I had appeared. He said, we have been fighting with the central government on this. This is our revenue. It cannot go under IGST basket. Under removal of difficulty clause, the law will be amended. He was very clear. But thankfully this circular came, so all this removal of difficulty has been removed. Correct? No? We don't have to go by that clause at all. This circular says it is a IGST transaction. Now, once we have decided it is a IGST transaction, we have to decide whether the exemption can be given to SEZ or not. What will happen now? It could lead to a lot of misuse. I'll give you an example. I have a SEZ in Bangalore. Okay? I have an employee. I have a SEZ also. I have a non-SEZ also. Right? Non-SEZ employee is required to travel from Bangalore to Mumbai for some work purposes. The hotel there is going to charge CGST and Maharashtra GST because supply is to a non-SEZ. Right? I cannot take credit of Maharashtra GST. Right? And the CGST system will not allow. So now what I will do, I have an inherent incentive to say this employee is a SEZ employee, don't charge tax. How is the hotel going to check whether this employee is a SEZ employee or a non-SEZ employee? Because if there is any tax leakage, it will be recovered not from SEZ, it will be recovered from the supplier. Correct? Under service tax law, when Form A2 was given, that Form A2 was given to SEZ, he was giving it to me. It was his responsibility to prove it is for SEZ purposes. Now the responsibility is on supplier, but the benefit is to the recipient. What to do? SEZ rule says to every employee a Form KK identity card has to be issued. So I have told my clients, if any SEZ comes and says, please give me exemption, tell them to give a Form KK identity card. Now if he misuses that, it is his problem. I can always say, whatever caution I was supposed to take, I have taken. That is point number one we have to remember. Second, it has to be used for authorized operation. All the benefits to SEZ are restricted to their being used for authorized operations only. Third,
What is this Form KK?
Form KK is the form in which identity card has to be issued to the employees of SEZ. Nobody issues it. Sorry?
Issued by the employee.
Employer to the employee that you are working in
In
SEZ.
that form it should be.
In that form.
It is mandated by the state SEZ rules or
No, the general central SEZ rules.
Just one question on the previous one when you said section 8, 9, 10, 11.
7, 8.
7, 8, 9. Is there any way that the earlier section in the CL-wise control get a higher rate than the later sections, whether in income tax or GST or wherever?
In this case, no.
No, yeah.
In this case, no. The reason is section 7 decides what is interstate, and section 8 decides what is intrastate. Section 7, one of the provisions is how to check whether it is interstate. The location of the supplier should be in one state. Place of supply as determined under section 10 should be another state. So I will go to section 10 only if section 7 requires me to go. If it is a SEZ transaction, section 7 itself says you don't even have to go to place of supply. Wherever it is located, it is an interstate supply. Example, if I am supplying some goods to you, or I am a chartered accountant, I am doing statutory audit for you, you are in Bangalore. I will charge you CGST, SGST. Next building is a SEZ. I do statutory audit for that SEZ. They are also in Bangalore. Still I am required to charge IGST. Because section 7 says supplies to SEZ is a IGST.
No, that is, if I am talking about the general thing, suppose there are two conflicting sections, or let's say there are two non-standing sections. In general, does the section which comes first in terms of serial number have a higher priority as compared, or all the sections have the equal priority?
Place of supply rules under service tax, they said they brought in a lot of provisions, and then they said in case of contradiction, the last rule will prevail over the earlier rule. That was specifically given under place of supply. But these provisions are missing in section 10, 11, 12 and 13. So then what happens in case of a conflict? A specific situation will have to be given preference over a general situation. That is how we have to reconcile the position. there are certain case laws under excise law which says that if there are two conflicting tariff HSN codes, you are not able to classify, right? And no other rule you can follow, specific, general, nothing. Then the entry which is coming later will be preferred over the entry which comes before. These are the only places where I see that the later will prevail over earlier. Otherwise, there is no specific provision under the GST law that says earlier provision will be more superior than the later provision or vice versa.
Issue we have section 7 separately identifies the supplies to SEZ or by SEZ as interstate supply.
Sorry.
This, section 7 specifically identifies supplies to and by SEZ as interstate supply.
Correct.
So this is okay, but for the intermediary services, there is some problem which is in the cloud.
Well, it's called intermediary itself, it invites lot of problem. Correct, no?
So because intermediary
Place of
services,
supply itself becomes this.
CGST,
So, all the conditions satisfied, you have to pay tax on that. The foreign vendor is not going to reimburse the tax to you.
and I'm not also sure whether I will pay CGST or IGST because
No, it is your location and you are located in your location, same state, CGST is.
CGST, but that is why 7 files.
Logically, it does not sound okay, but
Because if the taxable, the supply happens to be taxable, but if it's not part of
the issue is that, but I still think the CGST is just.
Sir, can we understand that hotel accounts, all IGST transactions should have equivalent list of KK forms calculation.
Correct.
So it means you have an IGST transaction without KK, you run the risk that you have given the benefit wrongly to a.
It is only as a caution. Law does not require you, but as a caution, if you have to advise our SEZ clients, there is an additional step which we can take further. Another important point which I want to touch upon is any supplies to SEZ is not zero rated, right? So we should not say, okay, whatever service you want, zero rated. Services received by SEZ should be part of authorized operation and should be part of default list of services. When a SEZ is set up, they are given some list of services. Only those services law recognized are used for authorized operation. They have given default list of services so that SEZ is not required to run for every service and get the approval. 66 services are there, including accommodation services. Food and outdoor catering is missing in that list. So unless a SEZ gets the approval from the unit approval committee that these services will also be used for my authorized operation, when the hotel bills for food, they will have to charge tax.
Where is this default list?
The list of SEZ services which was previously given, now the offices are not given because now in the SEZ office itself, that is because they were telling this is specifically because there was an A1, A2 concept before, now that is not required, so I am not required to give that.
I disagree on that for two reasons. One is even before A1, A2 started, they were supposed to give list of services. I am in fact supposed to tell them that I want these services, I had to justify and only then they would give, even before A1, A2 started. That is point one. From July to November, the issue was there whether default list of services even exist or not. In December, a SEZ circular has been issued which says whatever were the default list of services under service tax will equally apply even under the GST law. That means they have recognized that part, and this is not coming out of GST law. GST law does not recognize it. But SEZ law says only these services are for authorized operation. If that be the case, I always run a risk of being asked to pay tax because these have not been used for authorized operation of the SEZ unit or developer. See, whenever I am availing a benefit, I will have to be doubly careful because the customer is going to come and enjoy services and go. The liability of that I will have to pay. Wherever I can exercise caution and collect the money on a reasonable basis, customer is also going to accept this and say, yes, it is not authorized operation. Collect it and remit it. But if I don't collect it and I don't act prudently, I will have to pay this money from my own pocket.
it means for even for default list of services, if it's not mandatory that or it's not very accepted that they are using it for for the authorized service.
No, default list, no, the reasoning is default list is default list. Whether you use it or not, this is for authorized operation. That is why they gave it as a default list. It is like that rule 6.5 which we had in semi-trade rules. Whether used partly also for taxable, full credit on works contract. Correct, no? Like that this is. Can you move it? Sorry?
Default list is under
In SEZ this one website it is available. If you search you will get. Also, if we are supplying to SEZ and because of that we have accumulated credits on which we want to claim refund, it says on the invoices we have to get endorsement from the SEZ officer. So please be careful when you are supplying goods to SEZ and you have lot of accumulated credits. Please give the exemption with the condition that I will give you exemption only if you are able to get endorsement from the SEZ officer that the goods have been admitted into the SEZ or the services have been rendered in the SEZ. Getting that signature from officer is very difficult. Goods it is very easy. Admitted, they know goods have gone. Services is difficult.
the services also you should get interest.
If you are claiming refund, if you are claiming exemption and not claiming refund of it, no problem. Food and outdoor catering I have already discussed. Yes.
Is there any format to get the endorsement given by GST?
Just only sign. That's all. Sign and seal.
So if there is, it is not mandatory, but if the officer does not give us, so can the supplier of the service get the exemption?
Only when I am claiming refund, this endorsement is required. Refund of accumulated credit. So if you are not claiming that refund of accumulated credit, this endorsement is not required. So if you are not, see you have SEZ and non-SEZ clients, 5% SEZ. Hotels, how much will be SEZ? 5%, 10%. You don't have to claim. You don't have to get the endorsement. But if you intend to claim refund, say this is important in case of say goods or services, 90% of it I am giving it to SEZ only. Accumulated credits I want to claim refund. There this issue will come. Okay. Can we move ahead?
There of services also, I believe, Rule 89 says for refund you just need to get the endorsement from the district officer for services also.
That's what I am saying. I am stressing not on goods or service, on refund. Whether it is service or goods, if you are applying for refund, you will have to get the endorsement.
If you are servicing entirely or specifically to SEZ clients, you don't have any option. Either you see, or your majority of the clients, or your only client is only SEZ, you don't have option. Either you ask for refund of ITC or you pay IGST and then get that refund. So either way you have to go for refund.
Yeah, that's what even I wanted to say. Not in as many words, but I said refund if you are claiming, endorsement is mandatory. Which are because 90%, because 9%, whatever may be the case, if you are claiming refund, you have to get the endorsement from the officer. Okay, I have 20 minutes with me. I have a lot of slides with me. If you want, we can have question answer round, or I will continue with my presentation and whenever you have doubt, you will ask those doubts. Shall I continue? Clarification on refunds. Lot of clarifications have been issued on refund. Lot of attention has gone to refund. But whoever was supposed to give attention to that refund, that guy is not paying attention. Correct? No, and refunds are getting stuck. Now, inverted duty structure refund has been restricted on certain categories of goods and services. If I am in construction service and paying tax at the rate of 12%, overflow of input credit, I don't get refund on it. What is inverted duty structure? My input services are liable to tax, or inputs are liable to tax at the rate of 18%, but my output is liable to tax at the rate of 5%. In that case, I have accumulation of credit. Can I claim refund of that or not? Inverted duty structure says, inverted duty refund means when your inward inputs, the rate of tax exceeds the outward rate of tax, you will be able to claim refund of that. Now, fabrics are under the list which says on inverted duties on fabrics, where the rate of tax on an input could be 12% and 18%, but the output is 5%. I am giving you a lower tax rate of 5%, but you will not get refund of inverted duty structure. Fabrics they have notified. No, certain goods have been notified, certain services have been notified. The issue is the fabric processor is a job worker. He will get the fabric, process that fabric. Now his rate of tax is also 5%. If he acquires inputs which are liable to tax at 18%, is he entitled to refund or not? Fabric, you are not entitled to refund of inverted duty structure. Is the job worker also restricted from claiming refund is the issue. They have clarified in a very beautiful way. It says fabric is goods. I have notified goods. On these notified goods you cannot claim refund. Job work is service. What have I restricted? Goods, not service. On services, though you are paying 5% tax, if your inputs are higher than the outward liability, you will be able to claim refund of the same. Okay?
Sir, only refund is restricted, no? You can otherwise avail.
You can avail it and carry it forward and do some other business and utilize it there.
That is allowed.
So, ready-made garment, the same way we have fabric, ready-made garment also.
I have not studied on ready-made garments, but I have not seen any restriction on ready-made garments. Only on fabric it is there.
This refund example what you given for ready-made garment also is the same problem is happening.
There is a notification which has been issued on what are the goods on which inverted duty structure is not allowed. Right? That fabric is there. I don't see the entry of ready-made garments there. So you will be able to claim. I am not aware of it. Now, so whatever is not relevant, I am going to skip that. And if time permits, I will come back to it. Yeah. Circular 45 of 2017 is interesting. It says, if you have exported exempted goods, okay, can you claim credit on that or not? Section 16 very clearly says, export of taxable or exempt goods, you will get credit of the same. Once it is a zero rate it's applied, the question is, I have exported exempt goods. For exporting those exempt goods, I have acquired some inputs and input services. Can I claim refund of them? This circular says, you will be able to claim refund. But for applying for refund, LUT is mandatory. Right? You should have acquired LUT without payment of tax, only then accumulated credit refund is allowed to you. That is one of the conditions. Right? Now the refunds were getting rejected because LUT was not furnished. The circular says, when is LUT required? LUT is required when you are exporting goods on which tax is payable. If it is exempt goods, tax itself is not payable, and under LUT you are undertaking that if you don't export, you will pay the tax. Here if you don't export also, there is no obligation of tax. So for export of exempt goods, refund will be allowed even though you don't have a LUT. That is what the circular is clarifying. Circular 37 of 2017 gives answer to almost all the questions relating to refund. Okay? There are a lot of procedural aspects relating to 37 of 2017. I will highlight one or two very important aspects because the slide itself runs into 3 pages.
Sorry, if you can go to the previous slide. If it is already exempted or non-GST goods, excuse me for my lack of understanding.
No.
Where is the question of paying the GST and claiming it?
No, I am not claiming refund. Say I have exported some goods which are exempt from tax. But for exporting those goods, I have acquired lot of services on which I have paid tax. Can I claim refund of that? The question is, can I claim credit of that or refund of that or not? Credit is allowed. They say you can claim refund, and even if you don't have a LUT, I will give you refund.
But this is all part of the exports only, right?
Exports.
So,
On export, I don't pay tax.
correct.
But statutory auditor is going to charge me tax irrespective of whether I am an exporter or not. When he charges me the GST, can I claim refund of the GST or not? The circular says you can claim refund of it.
If you have both domestic and export transactions, how will you bifurcate all things for domestic so much or export?
All mechanisms are available in the refund rules. If you have common services or if you don't have common services also, the credit taken in that month multiplied by the export turnover divided by total turnover is your eligibility of refund. It's rule 89. Next, 37 of 2017 comes across with very interesting provision. It says, in the month of July, I exported certain services. Okay? The money was realized by me only in the month of September. I will repeat again. When did I export the services? July. When did I receive the money? September. If you go to the refund formula, it says this export turnover of services will be considered as export only in the month in which you receive the money. So when have you received the money? September. For refund purposes, this turnover is export turnover only in the month of September. But you have acquired the services or procured the goods in July, in August, in September, October, November, December, and refund can be filed only on monthly basis. So in the month of July you have taken 1 crore credit. In the month of August you have taken 2 crores credit. In the month of September you have taken only 1 lakh credit. Okay? The refund formula is credit availed in that month 1 lakh multiplied by export turnover 100 crores divided by total turnover, assuming there is no other turnover at all, 100 crores. Even then, the refund available to you is how much? 1 lakh rupees. All your credits are sitting in July and August, but refund is recognized on cash basis in September. So you will get money. You will be able to claim that refund only in September. This circular clarifies that who told you to file the refund on monthly basis. It says tax period. The tax period can be clubbed between 2 months, 3 months, multiple quarters, do whatever combination of succeeding periods, but this should not be in 2 different financial years. So I can apply for refund of July, August, September in this case, or August, September, October, or December, January, February, but not March and April. They have given the circular. But if we go online, it says which month refund do you want to file. Correct? So the circular has been issued, but GST portal has not been commented. Yes, sir. You had something. Say, practically you cannot do. Circular clarity. Correct. One experiment I have done, and it is before one of the officers. He has to decide on this case. Same case, say July 1 crore, August 2 crores, September 1 lakh. Circular says you can club. So I have clubbed all the turnovers. 100 crores turnover. Input credit also I have clubbed. 1 crore plus 2 crore plus 1 lakh. Okay. In the month of July, credit 1 crore. Export turnover while filing refund application of September divided by total turnover of September. Alright. Same thing for August, same thing for September. Filed 3 refund applications and given one uncovering letter saying, if I club all this and if the GST portal would have allowed, this is the amount of refund I would have got. Credit of July, August, September multiplied by export turnover of July, August, September divided by total turnover of July, August, September. Even when I am filing individual refund application, I am getting LHS equal to RHS. And based on this circular, please allow refund of this. It is before the officer, and we have to wait if he sanctions this amount. Because the stakes involved are very high. We were forced to use this method, otherwise we would not have got the refund.
Actually, the approach is that you know what is the amount of receipts in the month.
That we realized in December. That this is the problem which is coming. So subsequently we have adjusted.
Take only credits only when you are.
Yeah, from December we have planned properly. But July to December huge amount has got stuck because of import of service on which we paid the tax. This realization happened only in December, no? Correct?
So practically, even when we fill up any wrong amount in a while refund application, they don't have any option of cancellation or rejection.
Correct.
So that's a very big challenge which we are facing it up. Even we met with the GST officer and they said you cannot reject that application at all. So we are what they are trying to say is the balance amount will be lying in your account only and then you have to utilize in the next month. But that is again, it is happening or not, that is again a questionable.
In fact, it is not in your ledger at all. No? Once you file a refund application, that goes out of your electronic credit ledger. So in one of the cases, what happened, inverted duty structure, you are not allowed to claim refund of capital goods. Input services, they have amended the law now. But there was no provision to show how much is the credit other than capital goods. The system would automatically pick the total credit availed. So we availed and claimed refund of 1 crore. We filed a letter saying out of this 1 crore, 5 lakh rupees is towards capital goods. As per law, you are not required to give me refund of that. Please reject it. But when we file the refund application, the entire amount is debited from an electronic credit ledger, right? The entire 1 crore goes. Now the portal does not allow the department to pass an order electronically and recredit that amount, because the credit is not questioned, refund is questioned. What?
How to go with that? Actually, that circular is talk about that, because we have done a typo error. Actually, typically it was a typo error while filing the refund application. So we just told them to just reject it. But they said I can't do that anything, because this system is not allowing me to do that.
He can definitely reject it by passing an order, not in the system. That credit will not come back to you after 2 months. That is what our jurisdictional officer has said. Within 1 month's time it was supposed to come, and already 2 months have happened after he said 1 month. Okay, so after 2 months, if you don't get the recredit, then take the credit in 3B of that particular month and give me a letter that you have taken the credit on your own, because the system is not allowing you the recredit. So take it in 3B.
I don't think so. They will not accept, because that when we spoken to them, then they said they have to wait for some circular or notifications. So that's which we spoken to the GST officer. In fact, the hirer of also we have gone into that, and then they said we have to wait for some clarification from the department.
That's what our officer also said. And after that we said we cannot wait, sir. We will have to take this credit because we want to utilize against any other liability. He said you file a letter and then take the credit. I have no issues with it. Yes, sir, please.
But if there is any defect in the refund application, they can make it as a defective one, and then so that whatever amount debited in the ledger will be reversed.
As of now, that provision is not there, sir. They are able to reject it and give the order, but that amount is not coming back to the electronic credit ledger. Circulars are there. GST portal has not been updated.
Sir, in any section, the revision of the refund can be done or not? Revision of the refund applications.
GSTR 3B only they have not given. Refund is yes, sir, please. Reversal of input credit is not happening. That is self-declared number, no? Okay. There are 3 parts to that input service. Availed, reversed, ineligible. If you show it under reversed, it will get reversed. If you show it under ineligible, it is ineligible credit which you are not taking it. So it is not having an impact on electronic credit ledger. Please show it under reversal. Not sure, because if you show it under ineligible, it is not showing, because ineligible means you have not taken credit. Reversal means availed and then I am reversing. There that impact is happening. It is getting debited to the electronic credit ledger, definitely.
But DB can reverse only to the extent of what you have in his calendar, suppose.
No. That is, even if you have reversal more than your balance, straight away that balance goes to the electronic cash liability ledger, and you have to pay cash to make that good. If your opening balance and current month credit is 1 lakh, but you want to reverse 5 lakh, that 4 lakh rupees will straight away go to electronic liability ledger. That is happening. By end of all the GST seminars, the doubt will be on 3B matching and e-way bill issue. Apart from it, no other issue at all. Correct? No? That's all it gets restricted. Yes?
Credit of March. So that's the credit of March.
Of past. Okay.
That can be claimed next year.
You have time till September of next year to claim whatever credit of invoices relating to 17-18 you have received. So 17-18 invoices from July to March, before September 18 you are required to take the credit. After September 18 you will not be allowed to take the credit.
Thank you.
You should not take the credit.
September return or any return?
September return. So any return before September. That the final date is September, effectively 20th of October. So last day only we are going to file the returns.
What is the fate of accumulated cess?
Sorry?
Accumulated cesses. What is the fate?
My view is that the credit is available. Notices are being issued. The point is 140 subsection 1 says you can carry forward semi-credit. 140's explanation is there, which is applicable only to 2, 3, 4 and 5. This has not been made applicable to 1.
Correct.
And hence in my view, KKSS was a credit under the earlier law itself, it was restricted credit to the extent it could be utilized only against KSS, but that does not mean I cannot transfer that to the GST. According to me, you can take it.
You should have taken it.
We should have
Now
taken it.
it is not allowed.
No, not possible. The 27th December was the last.
Actually, we were advised not to take credit, and the safer route is to apply for the refund.
Refund, there are some case laws which says if you have refund of standby credit and you close down the factory, can you claim refund of that amount? There are a lot of judgments which say when you are closing down the factory, it is no use that you keep that standby credit, that can be encashed. Maybe we'll have to take those case laws and say KSS is eligible.
Correct, but there is no closing down, no, it's like a continuing
No, I'm
business.
saying that logic will have to be applied. If you are happy to
Okay.
forgo that refund, please forgo.
Okay, correct. You're saying that logic you can.
Logic will have to be. Otherwise, there is why will they give KSS refund to you? This logic will have to extend. Right. I think I'll wind up my session here. I have to travel somewhere. I'm very sorry. I have to cut down my session. I will leave these slides and I will also give you my email address. I think
More than one.
this is my email address.
Series, I think.
Sorry?
The session should
Yeah, it should be volume 1, volume 2, volume 3.
Yeah.
Right? Okay.
Everybody has got lot of.
Definitely. This is my email address. Please feel free to drop in a line at any point in time. I will definitely reply. It is Hanish, my name, Hanish, Hanish, .s @hsadvisors.in. It was a pleasure speaking to you. Thanks a lot, Bangalore branch, and all the participants for such an interactive session. Thank you very much.
We have come to an end of interesting session on GST updates. I thank Mr. Hanish for his time and efforts. May I request Sajay Kurana to present a gift voucher for his time and effort sharing his knowledge. Give a big round of applause. Thank you.